So are you buying the dip that never ends and looks like it keeps getting better than the previous dip? But the issue is that we thought and played like the last dip was the best dip. So let's talk about market, if there is anything left. And that's the problem. So what happened with the market after the Fed meeting? After all the negative catalysts are done, we were hoping for a nice green days and a Santa rally, but nope, they gotta talk. So I'm talking about too many talking heads. The news media, the articles, the Twitter, everyone talking about what Fed did and what they should have done and how they just borrowed some time in the market and that Omicron will hit hard and we are going to lose everything. And when fear like this builds up, market turns to a stock that went up to the moon fast to bring them back down, which is all tech, growth, and now we can add fintech in them. So basically our portfolio. So in this talk, let's talk about this never-ending dip and what's the best way to protect our portfolios and what not to buy. That's right. There is so much you can buy, but let's focus on what not to buy because you know what happens when things are really cheap. We buy and collect junk. So I posted an alert on our Discord yesterday, and by the way, if you are interested in a topic like this, then consider joining our Discord. Link will be in the description below. So I posted an alert before the market opened and said that we are in a very dicey situation where markets are not sure where to turn, and any bad report will turn market red and any good report will make market take a U-turn very easily. And we saw a clear example. Market have known about Omicron or rate increase and the UK shutdown, so that wasn't the case. But when we saw an uptick on jobless claims, then all of a sudden markets started to realize, oh no, we are heading to a more serious Omicron situation. Well, I always say this. If you want to predict the future about pandemic, just look at UK because most of the time we are about 2 to 3 weeks behind UK. So we opened big green yesterday and then talking heads started to appear from all angles and started to dissect with what Fed did and what they should have done. They started to compare Bank of England and how we should stop printing now and raise the interest rates now. And that creates a whole not so sure situation where market becomes indecisive. And the biggest fear market has is for the unknown. On top, the triple witching where thousands of contracts will expire is also taking place today. So that is why we are seeing this amazing speculation or undecisive market, a perfect storm. So let me share my screen and let me show you few things with the market, and then I will share my thoughts on few names and also what we can see in the coming days. So this is a chart I'm going to show on your screen of Nasdaq 100. So basically these are the 100 companies inside Nasdaq, and it fell 2.6% on Thursday, the most since September, wiping off its 2.4% rally in the previous session. So right here is when the Fed announced, this is the Fed decision right here, and then all of a sudden we saw everything went up as soon as the Fed decided or as soon as the Fed announced. Everything was expected. We all knew what was coming, and of course Fed did what they should have done. They followed what was the expectation and they released, and then all of a sudden the market went up. Then after that, all the talking heads started to appear in the news media, and then they started to bring the market down with them because they were saying that we are still printing too much. We are printing too much. It doesn't matter. Doubling the taper doesn't help. We need to raise the interest rate like Bank of England. And then all of a sudden market is like, oh no, we don't know what we are doing. And it started to come back and it lost all the gain it made the day before the following day. This is a real classic news media FUD example. Next, I'll show you a chart of Philadelphia Semiconductor Index. Some of you might know this, but I'll explain for those who don't. This is a very important index for tech companies, as the Philadelphia Semiconductor, or in short SOX, is an equity index composed of companies who are involved in the production or sale of semiconductor products like microchips, computers, networking equipment, and etc. etc. So right here is the chart over here. So SOX also erased its post-Fed advance, tumbling more than 4% for the worst performance since May. These are some nasty losses we are seeing over here. So look at this. So as soon as the Fed came out, it just went up sharply, and then boom, it came down, basically coming down with the gain. So it kind of took the whole tech industry with it, because you can see it lost almost 4.2% as the day, or all the gains that it made after the Fed announcement, it lost all those gains. This is, of course, we can see the volume was up. So that means that more people were selling and getting out of tech. That's why we saw this big pressure on tech or on Nasdaq. Next is a chart where I got wrong big time. So in my last video, I talked about how S&P will have an inflow of cash on the day of the Fed meeting. I mean, we had a pretty big day on the 13th where we had all this money piling up. So this was the 13th. As you can see, we had all this money coming in. And then on the 14th, we had a little bit of money. And then on the 15th, I was expecting a big inflow of money in S&P. But my God, was I wrong. Take a look here. This is a candle for S&P on the 15th. All the money went out. So all the green that you saw was all the retailers saying that, yay, the Fed meeting is over. Now we can put money in. The market will go to the moon and all the bull rally will come back and we'll make tons of money. They got it all wrong over here because look, all the institution, all the big companies of S&P, they started to take the money out. And this was a big, or I should say, this is the biggest stick on S&P. That means the money went out of S&P the biggest. Then the day after, which was yesterday, we saw a little bit of money coming back in. Not enough to give us the bull rally that we are expecting. This market is getting so weird that there is no one direction or prediction you can make accurately. But we are going to try, and we are going to try in this video right here. Okay, so what exactly happened? This is what I think happened. The rapidly spreading Omicron added more stress for the investors, of course, we know that. And that was most visible in the treasury market where yields continue to drift lower. With investors worried that fresh restrictions could harm the economy, stock investors instead focused on dumping stocks that had outperformed for the most of the year and the ones that will suffer from higher borrowing cost if the Fed does lift interest rate, let's say 50 or 75 basis points for the next year. So companies that has higher multiples or some obscene growth numbers tumbled more. And hedge funds who had piled into hyper-growth stocks, some of our favorite, are now scrambling to cut their tech exposure. Their holdings in software and internet shares have fallen to the lowest level on the record. And on top, Adobe missing earning was a big warning for some of the software names that trouble is coming. So with so much unknown, which we know market hates, how do you play this? Well, I'll share what I did. Of course, my opinion only, and I'm not a financial advisor. I did buy the dip, and I would say I have been buying the dip for a long time. It was hard because I was bleeding a lot, but I had to put my headphones on and buy. So I bought more Tesla. I've been buying Tesla since the beginning of this month, and every time it looks better than the previous. Then I bought some Affirm, and yes, I know, some of you will come and say that buy now, pay never is a scam and it'll die, but don't worry, we are not there yet. And I have a full video coming on the industry where I'm doing deep dives. So if content like this interests you, then consider subscribing and joining our Patreon to talk more about this and many more things. Then I also bought some Apple options and I wanted to buy so much more, but oh well, this is like the 10th dip I'm buying and I'm out of money, and I keep saying that and I keep getting out of my losers and I keep buying some of the winners that at least I think they're going to be the winner. Okay, so what should you not buy? Well, in my opinion, stay away from companies that have yet to make profit or have high valuation, especially from the options, because they will get killed with time. If you have done your due diligence and if you believe in the company, then definitely buy the shares. But this is not the time to buy any option positions on those companies because it's just so much unknown to the market. Also remember, we had a lot of profit that happened earlier this year and folks are taking losses on purpose so they don't have to pay taxes on those gains. I have done the same for myself, so I know what's going on here. Again, my opinion only, and I'm not a financial advisor. All right, so I hope I was able to provide you some value, and if you enjoyed the video, then please give it a thumbs up and consider subscribing. And if you like to talk about this stuff, then consider joining our Patreon and Discord. Details are given below. As always, an absolute pleasure to share all of this with you. Until next time, you all have a sparkling day.